And we're live, everybody. Thank you so much for joining me today. It is Wednesday, November 8th, 2:30 p.m. Central. What I want to cover today is the latest from both Rivian and Lucid, which are two upstart EV electric vehicle manufacturers who just posted their earnings yesterday after the market close, after the stock market closed. So without further ado, let's go ahead and get started right away. There's a lot of information in those filings that helps us understand what the state of the EV is, specifically around these upstarts. In case you're not familiar, this is a Rivian R1T, which is the pickup truck from the automaker Rivian. And then they also have a R1S, which is a SUV, a three-row SUV, as you can see here, and they're both electric vehicles. They also have a commercial van, which I'm going to talk about a little bit as well as we get into it. And then Lucid is a different automaker, and they have this beautiful sedan, truly, same as the Rivians. I actually really like their styling. This is the Lucid Air, and all these vehicles start somewhere around $70,000-ish, so they're quite expensive vehicles. Now, as far as how they performed, the reason why I track these two companies specifically is because it's a good idea, in my opinion, to really follow as many automakers as possible to get a full understanding of what's going on in the auto segment. So I don't just cover Tesla. I cover Rivian, Lucid. I cover GM, Ford, Stellantis. I cover all the different European auto manufacturers as well from time to time, so that I can get a whole picture of how these automakers are performing, and if there's still a trend towards adoption for this technology, or if there's some sort of fall off. And these reports and sort of what they say every quarter helps us understand where they stand. However, as it pertains to Rivian and Lucid specifically, there's like a divergence. One company is going one way, and then the other company is going another way. Let me explain to you what I mean by that. So here is Rivian's production and deliveries. So this is how many cars they produced, how many cars they made, and how many cars they delivered or shipped to customers or sold to customers. As you can see, on a quarterly basis, if we start at the fourth quarter of 21, Rivian has been steadily producing basically more and more vehicles every single quarter, ending this last quarter, Q3, with 16,000 cars. And deliveries, very similarly, are also in a very nice uptrend. On a trend upwards, rather, I should say. In Q4, there were 909 delivered, and the last quarter, they delivered 15,500 cars, which is an obvious, awesome trend. If you're an upstart automaker, that's what you want. You want a steady line up so that you can push more cars through your factory, which is going to help you lower the costs for each car, and it's going to help you reach profitability quickly. So obviously, that's a great thing about those automakers. Now, if we look at Lucid, they gave us these key statistics. They don't have these trend lines, probably for good reason. I'll explain to you why that is. They delivered about 1,400 cars in the quarter, so about 1/10, a little bit less than 1/10 of what Rivian did, but that's okay. They're just different automakers. They produce about 1,500, and they have other numbers here like their revenue, total liquidity, which is how much cash they have on hand, which is about $5.5 billion, and capital expenditures, which is how much money they spent on basically investing into the company. But what I really want to highlight, and this is where Professor Farzad, we're going to try it out and see how it goes. We'll see. I want to highlight a few charts that really describe why these two companies are going two separate ways. And why just because you're in the electric vehicle market, it's not a guaranteed success. And why it's so difficult to be an automaker. So let's go ahead and start with Rivian. So Rivian, this is each red bar is how much gross profit they've made by vehicle, which is basically how much money they've made from selling cars without taking into account all the other expenses in the business, just building the car and selling the car. And then the blue line is how many deliveries they've had since the second quarter of 22. So you can see here in the second quarter, if we look at this axis, they did about 5,000 deliveries, and then they ended this last quarter, like I said before, at about 16,000, 15,000 deliveries. And their gross profit, how much money they've made per car, or in this case, loss per car, has moved very nicely from losing about 150,000 cars per car made without taking into account all the other expenses that go into the business, just building the car and selling the car, that's it, no back office or things like that. And you can steadily see that they're going up and up and up and up and up to the point where they're losing about $30,000 per car, but they're still losing money. They're not making money like, let's say, a Tesla that's making somewhere on the order of, let's call it, I don't know, $10,000 $9,000, something like that. Probably a little bit less than that, but somewhere around that. Rivian's losing about 30,000, but it's way better than losing 150,000. So they're in a very positive slope, even though they had deliveries that went up from Q2 to Q3. Their gross profit is still kind of the same, which is something that maybe we need to talk about. But the company has guided to being profitable sometime in the next year, at least positive gross profit from their vehicles without taking into account other expenses for the business. And if we look at how they're performing from a, say, cash perspective, like how much money they have in the bank and how much money they're spending on running the business, let's just call it that, you can see that the cash right here, you can see that it starts at about Q2 of 2022, and you can see the cash balance is going lower and lower and lower over time, which is because they're spending all this money on vehicles that are losing money. So for every car they're selling, they're basically right now a losing money business, which is okay, money losing business. So they started the second quarter of 22 with about 15 billion in the bank, and they've gone down to about 8 billion. This doesn't take into account other investments that they can quickly turn into cash. This is just straight up how much money you have in the bank. Their actual liquidity is somewhere above this number, but I'm just measuring how much cash they have in the bank. And you can see this red bar here is their cash flow, which is basically what the net impact is to their cash going in and out of the business. And you can see it's below zero, which means it's negative. And it's very similar. It's basically kind of similar to this number, not really, but it's a way of measuring how much money the company is losing all in after they take all the expenses into account, cash. And they lost about $1 billion in Q3 from a cash flow perspective, but they still have a ton of money in the bank. And so the overarching theme about this, with this graph that I want you to take away, and this is for Rivian specifically, is that even though the company's still losing money on cars, about $30,000 per car, and the deliveries are going up, which they need to do to get to profitability, they still have money in the bank to support some quarters ahead. And if they can reach profitability by 2024, then they're in super good shape and they don't really have to worry about this number too much. Now let's compare it to Lucid. And this is where there's a tale of two stories, kind of. It's like two different things. They're both startups, but they're going in opposite directions. In the second quarter of 2022, Lucid had about $2 billion in cash. And then each quarter, you can see that they've been losing about $1 billion. This last quarter, they've been able to lower that loss to about 700,000 or so. But you can see that each quarter they're losing quite a bit of money. And the proportion of the amount of cash they're losing in proportion to how much cash they have on hand is much closer than Rivian, right? You can see here they have about $2 billion in cash. They lost about $1 billion in cash flow. They have about $1 billion in cash. They lost about $1 billion in cash flow. They had they were able to raise some cash or in somewhere or another, and they went up to $1.5 billion of cash, but they lost about $1 billion. They went down to under $1 billion of cash, and they lost about $1 billion. They had another huge cash infusion of almost $3 billion to almost $3 billion, and they lost $1 billion, right? And you can see this cash graph keeps like, you need to keep pumping cash into the company to keep it alive. Whereas Rivian, if you see the proportion of how much cash they burn to how much cash they have on hand, is much less. They have a much bigger cushion than Lucid does. Where you see Lucid, you can see they lose a lot of money compared to how much cash they have on hand. And the really striking graph here that I want us to think through is when you compare how much money each company loses per vehicle that they sell. And what this graph is going to show you is not gross profit, which is how much money you make or lose when you sell the car and you don't take into account any other expenses for the business. But after you take into account all expenses for the business, you'll see that one company is going one direction and the other company is going another direction. And so the bars in green is how much Rivian loses per car sold all in. So if you take into account all expenses for the business, and then this, I don't even know what the hell color I picked here. Yellow? What is that? I don't know. Whatever. Color. This one. That's how much Lucid has lost per car sold. And so, again, all in. So Q3 2022, both automakers lost about $400,000 per car sold all in. So net income per car sold. And then you can see this green bar over the quarters. You can see it getting closer to zero. So this is zero. All these numbers are negative. So negative 400,000, about negative 280,000, 220,000, 180,000, all the way up to almost about $100,000 that they're losing all in as a business. Again, not a good number. You want to be making money. But then Lucid is going the other way. So Lucid started in Q3 with about 400,000. They went down to 200,000 in the fourth quarter, but then in the first quarter in this year, they've been struggling. They're actually losing more per car in 2023 than they were in 2022. In the first quarter, they were losing almost $550,000 per car sold. Same number in Q2. And Q3, they got much better. They got closer to $400,000. But that's a giant number, you guys. That's a giant number, right? So Rivian's going one direction. Rivian is trending towards earning more money per car sold. And Lucid's trending the other direction. They're trailing towards losing more money per car sold. So you have a tale of two very different stories. They're both trying to be upstart automakers. They're both trying to get into the EV space, but one is trending correctly, the other one isn't, right? Is that the last graph on this? It is. Okay, cool. I forget how many freaking slides I had on this thing. Now, one of the things that Rivian's working on that I think might help them a little bit to reach that profitability is not just selling more and more SUVs and pickup trucks, which they say they're going to try to do from a business perspective. But they've also opened up these Amazon vans that I think some of us have seen. Amazon delivers. Rivian has been making these for Amazon. They had an exclusive agreement. Now that exclusive agreement has gone away, and now they can start selling these to more customers. The range is not that great, to be honest. It's 150 miles for the bigger configuration, 161 for the smaller one. So I'm curious to see how big of a customer base they have. For local deliveries, this is probably good enough. But you're not really getting a lot of battery for the price, which is kind of interesting to see. And then some of the plans that Rivian also has is that they want to increase prices and deliver more cars over time as they get bigger and bigger. But I'm curious to see if they're going to be able to do that with the current state of the economy, where the interest rates are. There's obviously a slowdown when it comes to more expensive vehicles in the market across every single automaker, not just electric vehicles, but really everybody. It's tougher to afford expensive vehicles. So I don't know, man. It's going to be tough for Rivian, I believe, in my opinion. And I'm very high on Rivian, to be honest. I really am. But I think it's going to be very tough for Rivian to get this graph where they're losing money per car sold. I'm curious if they're going to get it to at least 0 by next year, which they are guiding towards. But I don't know, man. That seems like a tall task, especially if you're focusing on more expensive vehicles and you're looking to increase your average selling prices. I think Rivian almost has to go the other way. They have to go towards reducing average selling prices, which is obviously going to impact their ability to sell more cars. And as far as Lucid goes, man, Lucid, I don't know. I want Lucid to do really well. I think Lucid has some really smart people at the company, but this cash situation is kind of odd. I mean, not odd. It just is what it is, right? And I would expect Lucid, I think, they will probably, if I were to bet, and I'm going to go out on a limb here, so can't wait for this to bite me in the ass. I think Lucid will go private sometime in 2024. They do have a lot of backing from the Saudis. I believe something like 60% of the company is owned by a Saudi fund or something. I could be wrong there. Check me in the comments if I'm wrong. But I think they would be better served if they're taken private, and then people figure out how to make this thing work, because it's not working the way it is right now. They're going to have to be selling a lot more cars to get to profitability. And they right now are exclusively selling very expensive vehicles, and they're looking to release another expensive vehicle, an SUV, that probably won't be ready for sale until sometime late next year. So it's like, oh man, it's a very tough situation for Lucid. And then the broader trend, which I want to highlight from Sam. So this is Sam Kors from ARK Invest. Real smart dude. Shout out Sam. Shout out Tasha. Shout out Kathy. All those folks at ARK. This is auto industry growth. The green line is battery electric vehicles. So year over year percentage growth. And the purple line is internal growth. So you can see that gas cars are not really growing year over year. If anything, they were declining. Obviously, we had COVID in 2020. And then through 2023, they've grown about 10%, which is good. But then electric vehicles are still growing upwards of 40% year over year. In 2021, they were growing 110% year over year. So when you hear these headlines like Sam is saying, we need to delay our EV investments, which is what some legacy automakers are saying because of slowing demand, what they're saying is it's going from 80% growth to 40% growth or 30% growth, but there's still growth. There's still growth. So for companies like Rivian and Lucid and Tesla and the electric vehicle division for Ford and GM and all these other companies, the market's there. The market is there. It's just, can you come out with an affordable, compelling car while doing so profitably that people want? And that's really the ultimate question. Based on the data that I just presented, I think Rivian has a better shot at doing that because they have just more resources available to them. They have more cash. I think they're in a much better market. And I think Lucid is too big for what it's trying to be. I think their factory, their investments, their strategy, they're trying to be something that they're not. They're trying to be a mass market manufacturer when they're really not. And so what they need to do is they need to figure out how to just vastly reduce the size of the company and figure out how to double or triple their sales and try to reverse this downtrend of sales that they've had for the last few quarters. Since the fourth quarter, their sales are actually down of last year. So you want to reverse that trend. So let me know what you think in the comment section below. I'll leave it right there. I hope this was informative and helpful, and we'll see you on the next one. Take it easy, everybody. Love you guys. Bye.